Conversation on the India-European Free Trade Agreement and what that might mean for the markets as well as stocks. Nilesh Shetty, Portfolio Manager at Quantum Advisors, joins in. Nilesh, hi, welcome to the show. Well, the big talking point and the big debate when it comes to the India-European FTA is basically what takes place with auto stocks. What's your sense? Because stocks such as M&M are reacting on the negative on fears of competition. What's your sense?
Yeah, I'm not that worried actually. I think traditionally when you look at auto buyers in India, there were three big drivers of purchase of any car. It was the absolute price, it was the mileage, and it was the after-sale service. A lot of multinationals who came to India to try and compete with the Indian manufacturers just could not compete on the mileage and the after-sale service. So I think it takes a long time to set up these trends, which the Indian car makers have set up. At the premium end, they might have some impact, but at the mass level and in certain rural markets where the listed players dominate, I doubt they'll have a meaningful impact.
Nilesh, as you mentioned, some of these premium manufacturers could see an impact. We do have some of these stocks which are lower, be it the likes of M&M. We are seeing something with Tata Motors as well. Of course, that discount or the cut will not have a big impact on somebody who's not going to buy those cars. But generally, what's the outlook on the auto space, considering the likes of M&M, Tata Motors, which do have some portfolio coming into the luxury segment?
Yeah, I am not really worried. I think they understand the Indian consumer a lot more better. They have a 50-year history in trying to understand and cater to the Indian consumer. I think it's a reaction to the news than actual numbers. I think as the numbers actually pan out, I don't see any meaningful impact from these European players into the Indian car market. What I would be worried about is valuation. Some of the players, especially after the GST cut, did see a run-up in valuations where it is no longer that attractive to buy these stocks. But if the valuations were to come off, we would be happy to add them to our portfolio.
Nilesh, good afternoon. This is Vinny joining in the conversation. What about the textile space, right? Currently, EU imports around $125 billion in terms of textile and apparel exports. India's share is just 5 to 6%. With this FTA, US issues that are going on for us as well, do you think the share could meaningfully go up? And does this change your strategy towards textile space as well?
Yeah, I mean, there is potential for that to happen, which is sort of this. I mean, I've been hearing this since 2003 when India joined the WTO. But it looks like India missed the bus on the textile value chain. A lot of the manufacturing has moved to Southeast Asia, including Bangladesh. And it is not like these countries have very high tariffs entering into Europe. So the competition also doesn't pay a lot of tariffs. So in that sense, a lot of it is theory. We really need to scale up our manufacturing base to be able to compete with the competitors we have in this space, which at the moment, it doesn't look like it's on the horizon. So there might be some marginal impact, but I don't expect a meaningful impact of the FTA on textiles.
Okay. If you had to play the news of the European, India FTA from a stock segment perspective, Nilesh, what would you recommend to your clients?
I mean, these are very long-term trends. I think perhaps you may see the impact on the services side a bit more. I mean, as India tries to open up the services market for these economies, I know India IT services has a meaningful presence there, but this improvement of mobility of labor may give them a bit more lever and how do they manage their sort of cost pyramid. So I think perhaps services may be a bit more easier way to play this than sort of typical goods and manufacturing services.
Nilesh, the other ongoing issue with the Europe has been carbon border tax mechanism, right? And that is something which could impact the steel sector or the cement sector as well. A lot of steel companies have spoken about maybe something that could increase tariffs for them. Do you think this is a risk for the space overall, considering the metal run-up that we have seen recently?
I've not seen the fine print of the FTA, but I am assuming the Indian government also had reservations on that, and there would be some mechanism under which that was addressed. But again, most of the steel companies sell in India. They are not meaningful exporters out of India. So they would be marginal. Again, if there is CBA impact, sort of carbon-based mechanism, taxation impact on these companies, I don't expect to be meaningful. I think the driver is Indian manufacturing demand for steel products. And that is the key driver of valuations for these companies.
Nilesh, are there any other sectors? You said service side, obviously that is something that one could look at. Any other sectors that one could watch out for as well? Because currently, the products that India exports, that also includes pharma, chemical, electronic goods, something on machinery, metals, agri side as well. So anything there that one should watch out for?
Perhaps auto is a sector where India has deep manufacturing expertise. I think, but again, it's a long drawn process. You need to get empaneled with these European car manufacturers and you get a small sort of allocation, then gradually you build up confidence. But in India, really, the manufacturing success of India has really been in the auto and auto ancillary space. Okay. So if auto ancillary perhaps is a bit more likely to benefit than the other sectors, the way it is positioned right now. So perhaps that is a sector investors can look at.
Okay. Well, Nilesh, just wanted to shift focus away from the India-EU FTA and just talk a little bit about the markets. What's your sense in terms of all of the bank numbers which have come out today? The likes of Kotak, Axis, the reactions that we're seeing are quite opposite.
Yeah, our largest allocation remains banks in the portfolio. The valuations that they're trading remains very, very attractive. Something that we've not seen in the last 2 decades. I think if you are a patient investor and wait for the credit cycle to pick up, especially given sort of where the NPA cycle is, I think you may make decent returns in that basket. So all the names that you mentioned are part of the portfolio and we continue to have large weights in them. All right, Nilesh, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Nilesh Shetty talking about the markets and specific segments and sectors there. We'll take a short break, but as we slip into a break, the countdown for the budget 2026 is underway. The most influential voices decode and analyze the impact and policy decisions from the finance minister. We bring you a power-packed lineup throughout January and on the day of the budget. Helios Capital's Amir Arora for all things market, followed by JP Morgan's Sajid Chinoy to discuss the macro signals. We'll also get you insightful analysis from industry veterans and Dinesh Kanabar and Ashok Vadva for the tax rhetoric.